If you're looking to discount resistance, so we get our PWAPs, our green and red dotted lines. You get double blues right in here going into it. That has to be able to get you off trying to play it from the short side if you're bearish. Now, if you're bullish because it's coming right out of the open, could this get you long? Absolutely. What do you want to see also? You want to see more longs or shorts? Well, if you're long, you want to see more shorts. You get that with this red laser. And then you get backed up where these blue triangles are not getting breached, meaning price is staying above it. Right here, this rotation stays above these two blues. You get more buy side imbalance. So it continues to push it higher. You get a pink that gets breached. That's bullish. At that point, you kind of already want to be long, but this is a bullish scenario, order flow trigger, so to speak. So you get a quick sell imbalance. Price says, nope, we've got some invisible buyers are enough to get this market to chase the price up. If you think of the seal with the beach ball on its nose, the seal are buy imbalance. It's man, it's so important to remember it's not buyers who buy it, it's buyers who didn't buy it yet. Those are the influencers on where price is going next. Buyers who have not bought it yet are more important to analyze, to follow, to read than those who already bought it. Am I saying buyers who already bought it are unimportant? Of course not. They're very important. They're just not as important because they already shook hands. A buyer who bought a 100 lot already shook hands. He's done. But 100 lot buyer who wants to buy it who hasn't bought it yet, he's influencing the entire imbalance of of what makes price go up and down. It's buyers versus sellers, but it's buyers who have not bought it yet versus sellers who have not sold it yet. In any product, in any service, when it has a price attached to it, it's influenced by people who want to buy it versus people who want to sell it. I always take things back to the price of a house, price of a car, price of a plane ticket, items that everybody that's listened to me have probably bought several times. They adhere to the same concepts of whatever you want to call it, supply demand. But order flow is beginning to read you into what people use to buy and sell. Order types, buy stops, sell stops, market orders, and then all the noise with the algorithms and the HFTs and now AI, they're not, you have to follow and look for the pattern because they're all not doing the same exact thing. They're cannibalizing each other. And we need to sit back and look for a moment where they're trying to trick themselves, the retail side. And that's why trading is often counterintuitive. And when people come to that realization at some point in their journey of learning in this business or of this business, when they realize, wow, that's counterintuitive, being long with shorts, being short with longs, I would have thought it was the other way. And I think that's the first aha moment is yes, it's counterintuitive in many of the concepts are. And you see a big buyer, you think, well, let's go with them. No, maybe opposite. Big buyer came in and price goes lower. What does that tell you? Tells you price is bearish. It's not afraid of that big buyer. The big buyer did not do to price what you think it would do, what it normally does. That's the punch a guy in the face and he doesn't flinch. I'm running the other way. Punch a guy in the face, he falls down. Well, that's a 500 lot buy order that rallies price and it keeps going up. Okay, good. Clues are things that happen that are indicative of maybe, that shouldn't have happened, right? That's got to be a head scratch moment. We should not have went down. How soon are you able to jump on that information? You know, if you listen to me long enough, you'll hear me say How close are you to the beginning of that pivot, that change? How close are you when a news, when the tape bomb, we used to call them, drops down the wires? How close are you to when that dropped? You're the last guy to hear about it in 5 minutes, 5 seconds. Did you hear about it before it hit the wire? Right? Because those are the things that are changing what price is doing. And our job is to be closest to that change we possibly can. The closest to more sellers to more buyers. That's bullish. Because if you're too late in the read, the premium's gone. The opportunity is gone. You bought the house after everybody figured out that they weren't building any more houses or that there's oil underneath the property. The values are going to go up 100x. Well, you bought it after everybody knew about it. You bought the top. So, how close are you to the new information, we could call it? How close are you in this case to an imbalance of buyers versus sellers? And that's what these triangles are. How accurate are you to where the market is? Longs versus shorts. And it's not just longs, it's got to be longs versus shorts, because just knowing longs isn't enough. You got to compare it to something else in order to find value. There are no good looking people if there were no ugly people.